Hi, it's Josh Brown. On August 22nd, should current trends hold, we will supposedly have shattered an all-time longest bull market record, according to the experts. But it's wrong, and I've had it with this conversation. I'll tell you why in a minute. Stick around. Okay, so supposedly 3,543 days is the record for the longest running bull market, and based on the March 2009 generational stock market bottom, we should hit that milestone by August 22nd, 2018. But I actually think it's the stupidest thing I've ever heard, and there are a million reasons why. But Mike did a post explaining that just because you're looking at a market that's up over the long term, that doesn't mean it's all one bull market. Mike, can you explain a little bit about what you were saying?
So initially, I had thought that a bull market starts not from the very lows, but when previous highs are eclipsed. So that would place this bull market starting in March of 2013. But somebody asked me a very simple question that sort of turned my brain into a pretzel. And the question was, from where do you measure a bear market? And the obvious answer is you measure it from the top. Implications being, well, why wouldn't you measure a bull market from the bottom? What do you think?
So I think you measure all right, so here's where I am on the bigger picture. I think that there are secular bull markets that are very obvious in hindsight, and we all quote them by year, and they always start from a new high. So when people talk about the bull market of the 80s and 90s, they say the 1982 to 2000 secular bull market. It was a bull market for the economy, it was a bull market for the stock market. Nobody starts the date of that at the bottom in 1974, which occurred in the middle of a secular bear market. 66 to 80 to 82 was a secular bear market. So I don't know why March of 2009 would be the start of this one. The appropriate starting point of this one, for several reasons to me, is the spring of 2013. It's when the S&P finally gets above the 2007 peak and the old 2000 highs. That is the start of a new secular bull market. We've been in one arguably 5 years.
Now, whether or not you believe the bear market started in March of 2009 or March of 2013, in my opinion...
The bull market, you mean?
I'm sorry, the bull market. We had not one, but two resets. So
I agree.
In 2011, it was, I think, it was
October 11.
You were
down 21% intraday in the S&P by October of 2011 during the European crisis and the Treasury market.
So the reason why that is not in the record books for a bear market is because on a closing basis, it was 19.4%.
You see how ridiculous this is, right?
Give me a break. And then from May 2015 or something like that, to the bottom in February 2016, that was absolutely a bear market, even though, again, the S&P 500 did not fall 20%.
Let me get into that, because I think what you're saying is important. People don't even understand from May 2015 through February 2016. So this coincided with the oil price crash.
And an earnings recession. Earnings declined.
Thanks to, energy. Earnings at large energy companies went negative.
And also the dollar strength was hurting multinationals.
Right, so you said the S&P fell 14.2% during that quote-unquote cyclical bear market on a closing basis, but the median S&P 500 stock fell 25%, and other areas of the market got destroyed. The Russell 2000 was down 26%, emerging markets down 36%, transportation down 26%. Big stocks like Apple, Netflix, and Amazon all lost a third of their value.
How about XBI, biotech, down 50%?
Demolished.
China, destroyed.
Right, so that is okay. So to me, it's a reset, first of all, and second of all, it's a cyclical bear market within the context of a secular bull market.
Now let me ask you another question. Does it even matter? Is this just
So
semantics?
I'm going to tell you why it matters and why when I hear people start this bull market from the bottom in 2009, I want to rip my skin off. I'll tell you why it matters. Because this label of longest bull market is always accompanied by the bull is exhausted. The bull needs a nap. It's always like some bullshit about you're in the last inning. or you're picking up nickels in front of a steamroller. The implication being that a bull market has to die because it's old, which we all know is not true. And it's used to scare people, and it's used to make people feel like they need to be dancing 1 foot in, 1 foot out. And they've been doing that shit for years already. It's not new. So that's why it matters. So if we're gonna label things as the biggest, the longest, the most gains, the least volatile, like if we're gonna use superlatives, like we're writing a high school yearbook, get the data right at least. Like,
so that part I agree with. A friend of mine texted me, hey, it feels like we're due for a pullback, something like that. Should I have more cash or whatever he said? But
feels like we're due for a pullback.
We just
always do.
We just had a bear market from 2015 to 2016. We had one in 2011. In the beginning of this year, we had a 10% decline to start the year.
Yeah.
Like this has not been a one-way ride. There has been hiccups along the way.
Okay, right. So we just had what we just described in 15 and 16. It was an earnings recession. Industrial production data actually went negative. Stocks went hugely negative.
Now, hold on. Obviously, this video will not age well, but that's besides the point.
Oh, well, this is obviously the top because we're saying that the market didn't top. You're saying?
Yeah.
Well, or we'll make a new high. I mean, what are we, 15 S&P points away from a record?
Pretty close.
So maybe it will age well. I just think like if your investment strategy is using lengths of time to determine whether or not you're bullish or bearish, do yourself a favor. Close the E-Trade account and find a professional. I'm not passionate because something went down 19% or 21% and we're splitting hairs. I think the bigger picture is people are distorting market data for their own benefit. Do you agree with that?
100%.
How can you disagree? Well, all right, so here's the last thing I want to say on this topic, and we can end with this. At a certain point, we will see a 20% decline in the S&P. Maybe it started already today. I don't know. Will that be the time to call the secular bull that started in 2013 over?
No, I don't think so.
I don't think so at all. We should expect that we'll see a 20% decline. And it doesn't mean that we're back into a crisis. I mean, I think like a lot of people have that mindset that every bear market is the end. And we can have plenty of those on the way up. You had one in 1994. You had one in 1998, 4 years later.
91.
Yeah, it happens.
Hey, 87.
87. So bull market starts in 82. In 87, you have one of the worst week-long crashes in history. First of all, by the end of that year, you're positive on the Dow and on the S&P. And you had another 13 years in the secular bull market. So that's all I want to say on the topic. You have anything to say? Or all right. Tell us what you think about this bull market, bear market conversation in the comments below. Are we being pedantic? Are we fooling ourselves?
Hold on.
Matter?
Look, are you being a shill?
Are we shilling? That's another conversation. All right. Tell us what you think. We'll see you soon.